Hey, thanks for joining me on my market report. My name is Mike, and if you're new to my channel, my videos, what we do is we create these videos on mortgage rates. We kind of get into these reports to try to get out to you folks, whether if it's in the industry, real estate industry, or you're just a consumer looking to refinance a purchase and maybe following mortgage rates. We like to get you the inside scoop of what's driving rates on a daily basis. It could come something from economic calendar, it could come from headline news, it could come from some geopolitical event that may have occurred. Uh, and then sometimes good news is bad news to investors. So we kind of get this information out to you because you could be sitting on the sideline and thinking that this good news would be good for rates, but however, it's actually bad news, and be sitting there scratching your head. We kind of get that information out to you guys so that way you guys can know what's going on here. A little bit about myself is my name is Mike, and I do work at the National Lender. I'm a loan officer, and we work with helping people with refinances and purchases on a national level here. So we help people refinance and purchase throughout the whole U.S. If you guys got questions about anything, or we're here to help you guys out. We're here to help you guys with the refinance or purchases. We're here to answer any questions you might have, whether it's something about rates or if it's something about different loan programs and stuff like that out there. So please feel free to reach out to us through the social media site that you found us through, and we'll go from there. Uh, Without further ado, why don't we get started with our report? Today, we'll start off with the economic calendar. We don't have anything scheduled for today. I did put up the week, so you can kind of take a look at what will be ahead of the week. Today, we just had a 2-year auction, which went pretty well actually. But we're doing this video kind of late in the day, so my apologies. I usually get these out much sooner, but we've had some little sickness in the household here, so people kind of running a little bit behind today. So my apologies. But tomorrow we do got some HPIs, which are home price indexes from Case-Shiller and FHFA, and then we even got the consumer confidence. And then Wednesday we got pending home sales, and then Thursday we got the jobless claims. And then Chicago PMI. So those will be the items here for this week. We do got a short week again this week, which will be Friday. Will be closed due to being New Year's Eve, celebration of New Year's Day. Being that it's on Saturday. So we'll have again, it'll be another short week. We don't expect a lot. We'll have some volatility because there's not a lot of liquidity in the markets because a lot of it is, if you've been watching my videos, we talked last week, a lot of the big hedge fund guys are out of the markets away for the holidays, and so we don't have them to kind of create the liquidity that we would normally have in the markets. So some of these small little swings by day traders could have some irreversible spikes in the markets as a result of it. So when you're trading in these 2 weeks, you have to be a little cautious. So let's take a look here at the mortgage-backed securities today. We did start off a bit lower today than we were, but we worked our way back up, and we're up about 5 basis points so far for the day. Again, now we're up to about 6. So we're approaching again towards the end of the day right now and working our way back upwards. So early on, some lenders probably priced out a little bit worse pricing today, but since then they've come in and repriced, and probably about the same, should be about the same price on what we had on Friday after we closed on Friday. The pricing we'll see. So for the most part, for us on the West Coast now those after had the reprice will be priced unchanged from what we saw after Friday's close. And here's kind of take a look at what the volatility looked like for the day. As you saw, we were way down here, kind of spiked upwards. We kind of came back a little bit, been kind of the sideways pattern for most of the day here, for the most part, and then keeping the same range here for the most part for the day. And then we'll take a look at the Treasuries, see what Treasury's been doing. We're sitting at 1.477, so just under 1.48. It's kind of the same thing. We've been kind of working at the same. On Friday we did break above the 25-day moving average. Today we started above it, but now we're kind of trying to work our way below it. We'll have a kind of a tight squeeze between the 25-day moving average and this technical floor. So we'll see if we can break below that technical floor. But if we start right here, it'll be pretty tight tomorrow when it opens up, because it'll be pretty close for this 25-day moving average to maybe cross through this this technical floor, and that will push bond or treasuries in one direction or other, either push it higher or lower. That'll give it more support in either direction. either direction it'll go. All right, so that's pretty much a wrap for the day. We do got that national average for conforming loan limits. They do have points built into it. If you follow my videos in the past, we kind of explain rates that they one size fits all. We could explain a little bit more if you guys want a little bit more information on that. Just go ahead and reach out. But I don't want to kind of keep uh, the video on a long nice level here, so kind of keep it short. So right now the 30-year fix is at 3.25%, and the 15-year is at 2.59% so far today for this week here. So looks like even the 30-year fix is now kind of jumped up to about 8 basis points. So that's kind of getting to be kind of nice at a little late day splurge here. All right, folks. That's about the wrap for now. If you guys got any questions, again, please feel free to reach out. If you guys like these videos, please help us out and smash that like button. This week should be relatively light, but for the most part because of the holidays. But we'll have a few spikes here and there due to the illiquidity in the markets out there. All right, folks. Have a wonderful day. Thanks so much for watching, and I look forward to see you guys in tomorrow's video. Bye bye.